We we are live and good morning, and I welcome everybody to watching. It's been impressive. We've gone from 0 viewers to like 1 or 2 viewers when I do these, so that's a huge increase percentage wise. So things are good. Good morning. Enjoy your cup of coffee. And today I wanted to get into the big one, which is how to pay for private home care. And in the comments, not the comments, but kind of the explanation of this video, I wanted to start out with the onboarding process, and specifically kind of remind families that when you look at buying a house or when you look at going into an assisted living or into a nursing home, they are going to be auditing you essentially and determining if you have the funds to pay for services. So when you go into an assisted living, commonly they will they will ask to show that you have the funds to be able to pay for X amount of months or X amount of years of service. And it makes sense. You're moving into their community. They want to make sure you have the funds to be able to pay for services. And the thing that I would just mention to families before we get into this is typically, maybe there are other home care companies out there, but speaking to Minute Women, we never do a financial audit. We never say, can you show me bank accounts proving that you have $100,000 in your account to pay for services for the next 6 months or a year. And while we have a service agreement or a contract that binds the person signing it that they're going to pay for the services, we don't do anything more than that. So it is certainly an agreement and a legal document, but home care companies typically do not do any type of, maybe audit's not their best word because that's much more invasive, but they don't make you prove, private home care companies do not make you prove that you have the funds to be able to pay for services. And so when we go through this and we explain kind of the payment process with things, keep that in mind that from the home care perspective, we're basically hoping that you're going to pay for the bill, and we have no concrete proof that you have the funds to be able to pay for it. And I think if you keep that in mind and see from the perspective of that angle, some of the things I'll talk about make some sense. So, when we've had customers that fall behind on their payments, oftentimes they'll say, hey, we're good for it, or we've been working with you for a long time, and things like that. And those relationships do matter, right? We have had multiple times situations where people owe us an incredible amount of money, and we continue services because we do believe that they are going to pay that, and whatever challenges have occurred in their lives, have interrupted being able to pay us on time. And it's usually not a monetary issue; it's something else. A family emergency that's unrelated to the person we're caring for came up. They had to fly out to California for a month, and they don't have access to the checkbook. Maybe use that as an example, kind of thing. And so, like anything, this is a relationship-based business. And when you have a good relationship with folks, you're willing to let, things slide and to give people flexibility. But just kind of keep that in mind, because I think sometimes we've had family members say, well, we're looking at it in assisted living now, but we have to go through the process. And I can't believe that they're asking for proof that we have the money to be able to pay for services. You never did that. We say, well, yes, that's why, that's one of the differences, right? And they're a little bit shocked by that. They may not be offended, but they might be a little bit surprised to be asked that question. But from my understanding, it's commonplace. And certainly in nursing homes, you're going to, especially if you're looking on Medicaid, they're going to be doing a 5-year look back to make sure you don't have hidden funds that could pay for the services out of pocket. So The onboarding process with private home care is meant to be streamlined and easy to start services very quickly. And the reason for that is we're a crisis driven industry comparatively to an assisted living. And assisted living certainly can fall under maybe like a speedy industry where people want to tour a few buildings over the course of a week and then move mom in as quickly as possible. But usually that process can take, months, at least weeks, if not months, to complete. And when we're in the private home care industry, it's usually a matter of days to start services, a week or less, I would say, for a lot of situations, not all, but I would say the majority of situations, 10 days or less, a week or less is when we're starting services, from when somebody calls to when the first time the caregiver, or for us memory care professionals, go into the home for their first shift. So, and many times, when the most amount of referrals that we get are typically on a Thursday and a Friday, where folks have gone into the hospital either earlier that week or the week before, and mom or dad, the person in the hospital, is saying, "Get me out of here as soon as possible," because they know if 5 o'clock on Friday comes, they're staying there till Monday at 2 p.m. So families will call us up and say, "How quickly can you start services? Could we start services at 7 o'clock at night and it's 4 o'clock in the afternoon?" So it can be a very fast process from somebody calling us up to when we are sending a caregiver out to provide services. And so, with that being said, the three most common ways people pay for services is, this industry is typically out of pocket. So it is going to be, most often it's going to be ACH, credit card, or a check. And I kind of wanted to talk about those in a little bit of detail. Most home care companies are looking for clients to pay with ACH. And one of the reasons is because it's a lot cheaper. The processing fees for ACH are much cheaper than it is for a credit card. And certainly I'm guilty of having credit cards in my wallet, and I try to use them to pay for the points. But in the back of my head, I know I'm paying for those points one way or another, right? When most people, I'm old enough to remember my mom paying for groceries with her checkbook and writing the check out and giving it to the grocery checkout person. And those days are over, right? And Visa and MasterCard and American Express and Discover did an amazing job of selling the US population the convenience of just having a credit card in your pocket at all times, that you just swipe at the time, but now you just basically tap it, or it can be on your phone, and it's as easy and convenient as can be. And certainly that is a benefit. But the side effect of that is that those merchants are being charged anywhere between 2 and 5%, 3 and 5%, in some cases higher if you allow the credit card company to just keep jacking up your rates to process those credit card transactions. And at the end of the day, those get incorporated into the cost of whatever product or service you're paying for. And so, we know in the back of our heads that, yeah, it's great to be able to get the credit card points, but the loaf of bread or the gallon of milk or the home care services or whatever it might be are going to cost more money when it comes to those credit card fees. Now, in Massachusetts, it is illegal to charge an additional fee for the credit card. So I can't go up to a family member and say, "Hey, our home care services cost this amount of money per hour, but if you pay with a credit card, I'm going to charge you an additional 3%. That is illegal in Massachusetts. It's illegal in other states. Weirdly enough, apparently what you can do, and I'm not a lawyer, so don't take this as law advice, but from what I understand, which is probably rudimentary information, is that you can discount the fee based on not paying with a credit card. So 6 in one, half a dozen in the other. I guess that's the workaround for that. And at Minute Women, we just go with ACH. ACH is like taking a check. It's inexpensive for us to process the payment, and it means that it will be less expensive for a family to be charged hourly. And when you're talking about paying an average, $45 an hour, $50 an hour for services, at, well, let's just use 50 on the calculator at, let's say it's a 100 hours a week to make it easy. That's $5,000 a week in services. And if you add, 3.5% to that, that's an additional $175 a week that you're paying in credit card processing fees, which equals just over $9,000 per year. So it adds up very quickly. And home care companies understand this. And so what do? They increase their rates by 3 to 5% to incorporate the cost of a credit card transaction. And so at the end of the day, we're all paying for it one way or another. And what we try to do at Men and Women is say, hey, listen, let's do ACH. And that way we can keep our rates as low as we can. We don't have to upcharge by 3 or 5% for every client across the board, whether they're paying by credit cards or whether they're paying by check or ACH. And ACHs are extraordinarily easy to process. The what I'm finding with many home care companies, and Minute Women is I count Minute Women in this uh, in this segment, is that we avoid checks as much as possible because paper checks are just too unreliable, and it's not just the families that understandably can forget to write the check out and things like that, but the United States Postal Service is unreliable. They're having their own problems, and I can't, for Minute Women, we don't even want to send our caregivers their checks in the mail because I can't even count how many times checks have gotten lost in the mail. They've never shown up and they're just gone. And they never get to the intended destination, and the caregivers are understandably concerned. They're economically fragile. They're freaking out saying, I need this check. And that's why we really suggest all the caregivers use ACH payments, because it shows up every single week at the same exact time, and there's no delay in any type of payment, and you're not relying on the United States Postal Service. And I'm sure they're trying to do the best that they can, but there are major problems. I was talking to a police officer. There's a cop that Minute Women is on a really bad intersection where a number of roads intersect with each other, and then there's a gas station right across the street. So people are coming out and going in, and it's just a mess. I mean, there's like 5 near accidents a day at this intersection. So there's a police officer that's often there trying to catch speeders, because obviously, faster you're going, the less reaction speed you have. And I was talking to him, and he was saying, that mailbox that's in our parking lot, that's for the building and for the general public, because that's the worst mailbox in Lexington for check washing. So try to avoid using that as much as possible, because what happens is people break into the mailbox, they steal everything into it, and they try to find written out paper checks. And what they do is they wash off the ink. And then so if you put in a check for $125, they either try to wash off the ink or they try to add a zero at the end of it so that they can bring it to a check cashing place, and they wash off who it's to and they make it out to themselves so they can get $1,250 or whatever it might be. So that is another reason why checks are really problematic in the mail. But the way that home care works is that we're billing in the rear. We're billing 1 week in the rear. So we are floating that money for the caregivers. We usually take a security deposit to start services, so I guess we're not technically floating that money, but we're paying 1 week in the rear. And so if you pay services every 30 days, likely we're not getting that check until basically 40 days or 45 days from when it would be due if we allowed a net 30. And so that's, 45 days or 6 weeks. And if you're paying $5,000 a week times 6, that's $30,000 that's being waited on. That's a lot of money. And so if you have enough clients that are trying to pay somewhere in the range of every 4 weeks to every 8 weeks, and you get 4 or 5 clients that are doing that, and that number adds up to being, $100,000, $150,000, or even more if you're a large agency, that is a lot of money to be waiting on coming in. And so that cash flow becomes really imperative. And so, I wanted to make this video just to kind of explain the reason why home care companies do this, and the reason why that we're all transitioning to working and moving towards ACH, because ACH is the cheapest processing that you can do, and it's just as convenient as a credit card, and that way um, it allows there to be a good cash flow for the company without really the inconvenience of needing to write out checks, because family members feel stressed out about it too, because then they all of a sudden remember that they're a week late and they're worried that services are going to cancel, and nobody wants to send out 72-hour cancellation of services or suspension of services for insufficient payments and things like that. That's not something we like to do. I know families don't like to get that, because then obviously it makes them feel sometimes sad, sometimes frustrated, and we want there to be a good relationship that way. So don't be surprised, whether you're in the Massachusetts area or nationwide, that when you talk to home care companies, more and more of them are really leading their customers into going towards ACH, because it keeps the costs lower while also allowing there to be consistent cash flow. And that way that we can pay the caregivers on time. The caregivers deserve to get paid on time, and so does our staff in the office that's working hard. And so that's why, we do a weekly ACH for our customers. Some home care companies may do bi-monthly or every 2 weeks, and then there are some agencies out there that are fine with 30 days net and they'll take checks. So it can range, but in the mastermind groups that I'm part of, everybody is for the most part is going towards the ACH payments, and I figured it would be worthwhile at least explaining why that is. And so the other ways that people pay for services, and I'm going to do longer videos on this, and I'd love to have a guest in here. There are two people that I'd love to have come on here to explain this. Shout out to Mike Carrington, shout out to Renee Coleman, to explain these in a bit more detail. But long-term care insurance. Long-term care insurance is a insurance policy that you often buy when you're in your 50s or 60s, and you then pay a monthly premium for the insurance policy. And then in the future, when you need either home care services, you need assisted living services, or nursing home services, it will reimburse you for those services. Now, the policies can all be different. They're now hybrid policies. There are just straight up long-term care insurance policies. Every policy is different, just like every policy for your house insurance is different. So if you only want a few $100s a day for care, then it's going to be cheaper. If you want up to $2,000 a day for care, then that policy is going to be much more expensive. Most commonly, and again, these are all negotiable, and they all depend on, they will all influence what your monthly premium is. But the majority of customers we've had with long-term care insurance have a 90-day elimination period. A 90-day elimination period means that you are paying out of pocket. The insurance policy will not pay for the first 90 days of care. So it's ensuring to the long-term care insurance company that you're needing these services on an ongoing basis. So whether that's home care, assisted livings, or nursing homes, you're likely going to have an elimination period that has you pay out of pocket for a certain period of time. Again, all of that is negotiable. You can have a 0-day elimination period, but that means your monthly premium goes up. I'm sure you can have a 180-day elimination period, which means your monthly premium would go down. But the most common that we've seen has been 90 days. And the other thing that occurs with long-term care insurance is that they need a specific amount of ADLs to activate the policy. So, that is working with your insurance company as well as the home care company or your doctor to prove that the individual that is going to activate their policy needs that level of care. Typically, it revolves around ADLs. So if somebody has dementia, if somebody needs help making their food, if somebody needs help walking, if somebody needs help using the bathroom and cleaning up, if somebody needs help showering, if you're hitting typically, anywhere between 2 and 4 of these, depending on the policy, that will also allow you to activate that policy. But if you only need one, that's going to be a problem. And so from the private home care side, what happens is the long-term care insurance policy holder, the long-term care insurance policy um, company will reach out to us and make sure we're a legitimate business, make sure that we're in good standing, and then ask us to provide the time records, so the invoices of the services and the tasks that were done on a daily basis. So they review those to make sure that it's legit and that it is all on the up and up. So that really puts the onus of some of the liability and responsibility on the home care agency to be truthful. We have had instances over the years where folks have asked us to game the system, which we've declined because we don't want to go down that road of fraud or manipulating things or doing anything that we would find immoral. Where we had one person call up saying, my dad's the one that needs care, but my mom is the one that has a long-term care insurance policy. Can you say you're providing care for my mom when it's really for my dad? So the long-term care insurance policy will pay for your services. And we decline that. That's something that we're not willing to do. Typically the old saying or whatever the saying is shortcuts usually take the most amount of time, right? And we didn't want to be involved in that. I'm sure with the amount of agencies that are out there, they found somebody that was willing to do it, but those are some of the things and hurdles you have to go over when you're looking at long-term care insurance. And the other way that people are paying for private home care these days is through reverse mortgages. In the past, reverse mortgages may have had a kind of a bad rap. There was some issues with that where I don't know if it was true or not, but perception is reality that people were getting kicked out of their homes because they couldn't pay for services. Essentially, a reverse mortgage is like a typical, it's kind of like a regular mortgage for people that are over 65 years of age, that have equity in the home, that can take up to about 80% of the value of their home and can use that towards services for private home care or whatever they may need. And so that is becoming more and more of a popular way for folks to pay for services, especially in the last 5 years, where the equity in homes has exploded throughout most of the country, but especially in the greater Boston area. If you bought a house in 1950, it already had a ton of equity in it. But then when COVID came and all of the need and the urgency and the kind of tsunami and demand for buying homes was unleashed, it made the equity in these houses, as everybody knows, go up even more. So that is becoming a more and more common way for people to pay for services. And so if you're a family member and you're looking at these things, it is good to start getting that paperwork together sooner than later, so that when you want to activate a long-term care insurance policy or go down the road of a reverse mortgage, you have hopefully the majority of the paperwork that is needed to be able to activate that or sign on the dotted line for those mortgages. And certainly becoming the power of attorney, being healthcare proxies, getting those types of things done. Estate planning is imperative to be able to do this, because then you can help make some of those decisions and you can sign on the dotted line when it comes to care for mom or dad, rather than trying to get them to sign on the dotted line. So this is where estate planning is essential. And what we always say is do it now when mom or dad is in good faculties, they have no memory disease, and they can go into the lawyer's office, or the lawyer can come to them, and they can be competent to be able to make these decisions, because you don't want to wait till mom or dad unfortunately has memory disease like dementia or Alzheimer's. That means that they may not be competent, or it may be a crapshoot on the day that they're competent to be able to make those decisions with their estate. So those are the most kind of common ways that people pay for private home care private home care services. I wanted to make this video again to kind of go over what that onboarding process is. Most people are paying out of pocket for that, and most home care companies are kind of nudging their customers towards ACH because of the lower costs and the ease of use. But still, there are agencies out there that accept credit cards and accept paper checks. And then long-term care insurance and reverse mortgages. In my experience, reverse mortgages are becoming far more popular than long-term care insurance. Long-term care insurance is getting very expensive, and a lot of families are concerned about what happens if we never use it? Then we lose all that money that was put into that policy. And so now there are hybrid solutions. I'm not an expert on it, where it's a hybrid of a life insurance policy slash long-term care insurance policy, where you can still get some of that money back, or you can get a payout if you don't use the insurance policy. So those are things to look at, and hopefully I can get some people on these lives to explain it a little bit better. But that is kind of the overview of how people pay for private home care, and that explains that. So I wish you a great Wednesday. Enjoy your coffee, stay warm out there, and we'll catch you on the next one.